Don't worry too much about that. That's really just there so you have something else to look at besides me. Because as you know, accountants are well known for their proficiency at public speaking, so bear with me today. Please stop me at any time for questions. If I get into any jargon or anything's not clear, I don't mind stopping. And today's not going to be quite as fun as my showboat, but hopefully it'll be interesting and useful to those of you in the room because we will be talking about business entity structure. And I believe most of you in the room are business owners. And this is the question I get most often from business owners is, what entity structure should I have? They think it's a simple question. It's such a loaded question. It completely depends on what type of business you are. Do you have multiple owners? What are your goals for short-term, long-term? So this could take hours and hours if I went through everything, but I'm going to take a single business owner who's, we're going to say, some service-based industry and no partners whatsoever, and go through that situation. Most businesses start as a sole proprietorship because that's the easiest way to do it. You basically just start working, and then that's reported on your Schedule C on your tax return. Then occasionally they'll step their game up and become a single member LLC, get a little protection there. It's reported the same way on your tax return, still on Schedule C, and then you do have an additional California or whatever state you're in filing requirement typically for the state tax return. Then some people get even more protection, and they go to a C corporation or an S corporation. So with the sole proprietorship and the partnership, your net income is subject to 15.3% self-employment tax. For the S corporation and C corporation, you're not subject to that 15.3 self-employment tax. One qualification, because accounting is all about qualifications. The S corporation, you are required to pay yourself a reasonable salary as defined by the IRS, which the IRS does not clearly define, so that's nice of them. It really depends on what industry you're in. So I usually tell clients, what would your salary be if you were working at a company doing what you do? Pay yourself that. It also depends on what your real income is from the business. If you're making no money, it's going to be pretty reasonable to take no money.
Good advice.
Try telling that to millennials. The net income in these situations for sole proprietorships and partnerships and S corporations, that's all going to be taxed at your personal income tax rates. For the sole proprietorship and partnership, it's reported on Schedule C. For the S corporation, it flows through to you in a Schedule K1. The C corporation is going to be subject to corporate tax rates, which are generally higher than the personal tax rates that you're at. The net income for sole proprietorships and partnerships is also subject to the Medicare surtax that we've been experiencing for a few years now, that came along with the Obamacare changes to the tax code. And that's an additional 0.9% above certain IRS thresholds. And that's way too complicated to get into today. But the brilliant thing about S corporation is that that income is not subject to the additional Medicare surtax right now. That's one of those loopholes that the IRS likes to sew up for us, and while it's here, we like to use it. The C corporation is also not subject to the additional Medicare surtax. Now, with each of these entity structures, the other thing business owners always want to know is, how do I get my money out without paying taxes? Sole proprietorships and partnerships, all your net income proceeds are being taxed in the year that you're making that income. So when you want to take out the money, you can go ahead and take it out. When you're a sole proprietorship, there's probably little to no difference between your business and personal expenses anyway. So, although there should be, but another day. With an S corporation, You can also make distributions tax-free because you are paying income taxes on the net income of the business in the year that you're making that net income. However, you cannot take more out than you have in shareholder basis. And you get shareholder basis in two ways. You can, by putting money into the business or by making money. So your net income and also your capital contributions or your loans to the company go into that basis calculation. With C corporations, you will be making dividend distributions to yourself to be able to get that money out. So, all this is very fun to talk about, but what does it mean when it comes to the actual numbers? So I've got an example there that no one can read. We've got a married taxpayer. His business made $1 million of gross income. His net income was $200,000, and he took $100,000 of wages from that company. In the C corporation case, we're going to show that the $200,000 was taken as a dividend distribution just to match the other scenarios of the $200,000 of net income being available to that business owner. So the self-employment tax, well, essentially you're going to see almost the exact same situation, between sole proprietorship and partnership. It's reported the exact same way on the tax return. So you're going to have $8,000 of self-employment tax on that income. You're going to have federal income tax of $66,000, and then you're going to have a Medicare surtax, $450. Not too bad in this situation, but once you're making a lot of money, it can get a lot worse. So the total for both of those comes out to $74,000, and this is strictly federal. It gets a little more complicated with states because I work with a lot of different states, so I just focused on federal in this situation. The S corporation, we've got no self-employment tax. Federal income taxes of $67,000. You'll notice it's a little bit higher than the partnership and the sole proprietorship, but there's no Medicare surtax. So that comes out to $67,000. And then the C corporation, that's a fun one. It pretty much always comes out the worst way for C corporations. So our total there for federal income tax is $102,000. So you see, I've got a favorite, obviously. I like the S corporations. And honestly, if I could write everything that is so wonderful at S corporations, that would probably go all the way down to the bottom of that poster. The one thing that is not reflected on here is the state taxes. So for S corporation, it is 1.5% of net income that you're going to pay to the California Franchise Tax Board. So that will take the difference, that will add another $3,000 of tax in this situation. Still overall, between being a sole proprietorship or a partnership to being an S corporation, you'd be saving about $3,000 to $4,000. Pretty useful. This is a very, very generalized situation, and I highly recommend if you have any questions about this, it should be a research project or a planning project with your CPA and likely your attorney as well. Any questions for me? There have to be questions. Jean.
What is your feeling, because this question came up at this economic meeting that I went to, about the flat tax? A flat tax, if it were ever to come.
I think you're putting a lot of accountants out of a job.
Well, they asked, a lot of people said that, but then they felt there would still be a need for, even with that.
Well, I've read a lot of opinion articles about this flat tax. Every article I've read says, yes, we'll start with a flat tax. And then they just qualify and exceptions, and it ends up being just as complicated as it is now. I mean, you always are going to have qualifications and exceptions to be able to try to make it fair, and it's going to end up being the same thing.
Taxes aren't fair, but the thing is that in California we keep getting more and more things through legislation that are considered fees, but what we know is taxes. I had a presentation by County Supervisor Wynn yesterday, and Michelle Steele. And they're talking about the way, especially the way the state is regulating the gasoline tax, and where they're shifty up there, you know. So I mean, everything is considered a fee for this and a fee for that, and then all of a sudden they make it. It never goes away, and it's a tax, and then they take it away from one pot and put it in the general fund, which because they're so the spending and spending and spending. So it's really hard because California is the hardest state to sell because of the fact that we are so overtaxed. That, you know, I think that flat tax thing seems. I mean, I'm sorry about the question, but
no, that's fine.
Do you think it'll just never really happen?
I think any overhaul is going to take a lot of time, and even if they get too close to a flat tax, there's going to still be a lot of exceptions and qualifications to try to make it fair. But the tax payments that are fees is even hitting the federal level now with the shared responsibility payment, and that's if you don't have health insurance for the entire year. That's a brand new form we've had this year for personal income tax returns, and those penalties are reaching the thousands now. Sean.
So, are there like any obvious places you see small business owners making, you know, mistakes that could be overcome, or suggestions you would make to save money on taxes? Or
Well, the absolute biggest mistake I ever see is not calling me to ask. Just before you make a decision on anything, just a quick phone call, you know, if you're heading down the wrong path, could steer you right. I mean, I don't charge for phone calls throughout the year. I mean, if you call me for 5 minutes, I'm not going to send you a bill.
Right.
Just call. Just
Okay.
ask the question of whether you're doing it right.
That's great.
Mark.
Have you run into a lot of business owners who basically fail to keep pace with the quarterly tax payments?
Yes.
And what's the fastest way to eliminate that problem?
We have a good fun trick that I like. Typically, business owners are usually, well, let's go with an S corporation case. They have to pay themselves wages. At the end of the year, if we've realized they have not paid their estimated taxes, we can pay themselves out a bonus and apply that all to the federal income tax and state income tax. And when you do that, they count that as being paid timely throughout the year.
See all these little tricks.
I have a feeling Mark knew the answer to that one before I
I like
asked.
to break softball. Emily and I, we work hand in glove.
Is there a tax app that you recommend? Or just
Her.
you?
I'm a good tax app.
But just to like keep track of things for you?
You know, there are a lot of publications you can subscribe to their email blasts. Accounting Today is really good about giving you good insights about what's new. That's really what I would suggest besides calling a CPA every now and then.
Thank you.
Anybody else? Okay, thank you very much.
Thank you.